Hello, and a big welcome back to the 5v6 platform. Today, we're tackling one of the hottest questions in the market right now. Where could Bitcoin land by the end of 2025, according to different analytics? And how you might position yourself to ride the wave. Picture this, it's December 2025, you're looking back on a year that tested every investor's nerve. Did you buy the bottom and hold through volatility? Or did you miss the rally and wonder what might have been? That story could be yours, and it starts with understanding the forecasts and putting a solid plan in place today. Some top analysts from Bernstein see Bitcoin climbing toward $200,000 as big institutions pour money into newly approved spot ETFs. Others at H.C. Wainwright are even more bullish and forecast BTC reaching around $225,000 based on historic cycle patterns and growing corporate adoption. On the more aggressive end, Unchained Capital's Joe Burnett thinks Bitcoin could top $250,000 thanks to its unique appeal as a digital store of value. Meanwhile, the stock-to-flow model popularized by Plan suggests a potential range anywhere from around 65,000 all the way up past $500,000, depending on how past halving events replay. Technical teams like those at CoinDCX point to chart and momentum signals that imply a fair target zone between 115 and 132,000. To bring these numbers into focus, let's break down what drives them. Institutional flows and ETF approvals signal huge pools of fresh capital, but they can also trigger flash rallies and sudden pullbacks. Historical cycle analysis offers a roadmap for timing peaks and troughs. Yet no two cycles play out exactly the same. On-chain metrics like active addresses and miner holdings show real user and network health, but they don't capture the macro pressures of inflation or interest rate swings. Technical charts reveal patterns of support, resistance, and momentum, yet they can be blindsided by a single tweet or regulatory announcement. With so many different forecasts floating around, how do you turn that noise into a strategy tailored for you? Here are some ideas you can put into action today. First, consider dollar cost averaging. By buying a fixed amount at regular intervals, you smooth out the bumps and avoid the stress of timing every market swing. That method worked well for early adopters in past cycles, and it keeps you disciplined when emotions run high. Second, don't put all your eggs in one basket. Even if Bitcoin feels like the future, balancing some of your budget into other crypto projects, stablecoins, or traditional assets can help cushion any sudden downturns. Third, lock down your holdings with strong security. Use reputable exchanges, enable two-factor authentication, and think about moving long-term positions into a hardware wallet. You don't want to lose gains to a hack or forgotten password. Wow, it's 2025. Fourth, set clear targets and exit plans. Decide in advance at what price you'll take profits or cut losses. That way, you avoid panic selling or holding through a full crash. Fifth, keep a pulse on news and regulation. Follow reliable sources on developments like new ETF approvals, tax rulings, or major network upgrades. Those catalysts can create big moves. Finally, stay curious and keep learning. Dive into on-chain data tools to watch network activity, subscribe to expert newsletters, and join community channels to hear diverse perspectives before making a move. Remember, Bitcoin's path to the end of 2025 is far from guaranteed, but by understanding these forecasts and applying clear risk controls, you'll be in a stronger position no matter which way the wind blows. If you found this breakdown valuable, subscribe to MN5v6 for more deep dives, hit the bell so you never miss an update, and drop a comment with your own forecasts or questions. Let's navigate this journey together and turn insight into action. Keep mining. Last code is 2.